to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich.
Hello everybody, welcome back to another exciting episode of The Rational Investor. This is Julian reporting in from Bangkok. You can't tell this time because I have my green screen. Finally, I set it up. You can see my face looks like very sunburned. I don't know what's going on. Last week I had a bad cold. I still have the cold, but now I'm taking antibiotics. We'll see. It seems like it's starting to work. So I'm definitely feeling better, but I still think I sound a little bit weird. So apologize for last week. I didn't realize how weird I sounded until I listened back. I was like, oh, that was bad. Anyway, you guys don't care about that. We're gonna get rid of the little stock screen. I'm gonna shrink myself. Hope everybody's doing well today. By the way, I'll pull up the YouTube and we will take a look at who is here today for me for my little bit late start. There I am, right in the bottom. It does look much better when I'm in the bottom corner and I'm not like, there's no box or anything. I might stick to doing this in the future, even though it's annoying moving. I have to move my green screen because it's like in my living room. I don't really like doing the streams in like my little box office area. I much prefer here out in the living room where there's windows and everything. Very spoiled here in Thailand. Very spoiled. Let me see. Let me pull up the YouTube. Let's see who's here. Oh. Sorry guys, just waking up from a little bit of a power nap as well. Okay, 7 people watching. Hello everybody. Let's wait for it to load. In the meantime, last week I talked about how investor sentiment, last 2 weeks actually, investor sentiment was very bearish. The market was not looking great as far as momentum indicators, but I was talking about that it could bottom at any point. All right, let's see who's here. Hello, Nick. Hello, Alex. Hello, Rad. Hello, Coke. Hello, Cotter. Oh, my favorite person is here, Cotter. How do I give him a heart? I'm not signed in. If I was signed in, I'd give him a heart. And a couple other people. I just clicked off it. Now I can't see who's here. All right, well, welcome everybody. Stick around. Don't leave too soon because there's been some updates with the breath. So we're going to go through those results again and talk about how amazing it is. And I'm going to provide you with a slight warning, which you might not be happy with, but it's coming. Hello, Gills. Okay, I warned about how even though the momentum, like last week, I talked about how even though the momentum indicators were looking very bearish, the sentiment was extremely bearish to the point that I felt there would be some type of short squeeze. And lo and behold, what happened? What did we get? What could this be called other than basically, I mean, look at this. So let's see, let's look at the market last week when I was talking. So last time I spoke to you guys was on the 5th. Now it's the 12th. So here was the 5th, right around the bottom. And if we look at things like on the daily chart, right here, the 4th and the 5th, this was looking terrible. This was my line in the sand. But at the same time, we were at a 200-day moving average. I talked about how we were at the bottom of the trend line. At the time, we were actually below the trend line. Look at how tricky they were with this. They literally brought it below the trend line and sort of closed below it, but not 100%. This was a very confusing bottom and probably tricked a lot of people. But investor sentiment was the key there. When you had over 40% of investors bearish, the market had to stage a rally to wipe some of those people out. And that is why I closed part of my shorts down here. So just like to recap about what we talked about last week, you can see on the RSI, we broke out on the daily now already. This is a bigger rally than I honestly expected. I'm watching it now and it looks like, you know, it has legs. I don't see any reason for this to stop at this point. Although it is running into my major resistance level up here. And it tagged that 43.95 level. The 1 hour had a big pullback. but I don't see any pullback on the 12-hour yet. Daily looks very strong. It is hitting the VIP level. The big question is, do we pull back a little bit and then continue higher, or do we just roll over from here? Right now, from what I'm seeing, my money is on that we're going to pull back a bit and then continue rallying. But we need to look at a couple other things before I make that conclusion. So let's go back to here. Let's look at the data that came out today, right? 12th. Okay, you guys already probably saw the CPI numbers basically came in line. CPI month over month, a little bit higher, just 0.1%. But this is the first tick up that we've had in a really long time. The rest have been below. Unemployment claims basically came in line. No really big surprises here. So the market reaction shouldn't surprise anyone. I mean, it didn't really do much at all, right? I mean, here's the numbers came out here, 7:30. Is it 7:30? Yeah, 7:30. So obviously we had a bit of a dump because the market doesn't want to see a higher inflation number. But nothing too intense. I mean, these are just short-term moves to hit liquidity. There were probably a bunch of people that jumped on the long side, and they needed a pullback to just basically take their money. Extremely volatile market here. Let's look at where options are going to close tomorrow. Let's see. 13. Tomorrow is 13. So where is my strike? Yeah, look at this. 400. Look at all the puts at 4,300. They had to rally to destroy those. So I've talked about this kind of pattern before where you have, oh, look at how I can kind of point at the screen. I can't really go all the way. So on the left-hand side here, you have a lot of puts and a lot less calls. When you see this kind of pattern, almost always we see a big rally. And that's what we've seen here. And there's really no pin level. I mean, the market could easily rally past this 4,400 and just keep going. I've seen it happen before, but we'll say for now that the 4,400 is the level that they might not push it past, because why bother paying these out if you don't have to? It's already rallied quite a bit. But I in the past, when I've seen this kind of pattern, I've consistently seen market rallies rather than pins. So just be aware of that. Let's go back to the charts. Okay, let me just take a drink of water. Phil, we can talk about that. Yeah, I can get into it later when I talk about crypto. But to answer your question really quickly, crypto and stocks are not as correlated as you think they are. That would be the main answer. What I wanted to talk about actually was something interesting. Our breadth system 2 days ago went very long on the stock market, and it went very short on crypto, and it's been perfectly correct. I was surprised about it, but it's performed incredibly well. So I will go over those results again near the end of the show. But you're going to see that in our S&P portfolio and our Bitcoin portfolio, we are at all-time highs as far as profits with the breadth trading indicator. So I will talk about that at the end, after I go through everything that's going on with the market. All right, S&P. Let's go to a weekly chart. This is our uptrending channel. Okay, you can see on the weekly chart, this is our big uptrending channel. Here's the RSI uptrend. We did break down from that. We're coming up and we're retesting the underside. However, we didn't break down from the parallel channel. And there's a possibility that we are going to put in a wave 5 move higher. I've seen a lot of people talking about this and posting about this, and I do think it has legitimacy to it. So this is your wave 1. This is wave 2. Here's your wave 3. Here's your wave 4. And then your wave 5 would be up here, possibly above all-time highs. So that would be your, if I do an extension, if we assume this is wave 3, the extension would be up here, 1.382, 48, and even 1.618 could go up to here. That's kind of the extension we'd be looking at. Also, oftentimes, the final 5th wave can be the same length as the first wave. So we can look at the first wave. And this is something I've seen a lot of people posting, especially on Twitter and stuff like that. Yeah, so right up to this 48. 63 area. So this is a possible pattern to be aware of that is almost too obvious, and I don't want to believe it because it's so obvious. But at the same time, we do have this daily cross that happened. We have a clear path to higher highs. We have bearish, overly bearish sentiment that developed very quickly. We are going into a election year, and historically they do want markets higher going into that. But at the same time, we have all these wars and all this stuff breaking out. I mean, I think it's ironic that at the bottom you had not really the bottom. It was like the day before the bottom, you had this huge thing happen with Israel and Palestine, right? I'm not going to get into the politics of it. I don't even want to talk about it. You can look that up on a million other YouTube channels. But I think it's interesting that around the bottom, that happened to create maximum fear, which would probably make more people sell. So, you know, be very careful with the news and what's happening, and try to pay attention and watch technicals. Now, if we go to a 4-hour chart, there is potential that we're topping out a bit here. I think it's a very, very, very confusing area, and I consider this like a no man's zone. I really do consider this a no man's zone. If we get a pullback, I would consider buying. I would seriously consider this like a possible buying opportunity, just because this daily broke above. It broke above this downtrend line. So I like what I'm seeing here. I'd like a pullback, and on the pullback, that's when I can buy to basically hedge for that wave 5 move. That's what I'm looking for, that fifth wave. But at the same time, I feel like it's a little too obvious. So I don't really have a good answer or a good trade here. I wish I did. It's just a very, very, very difficult market right now. This is an extremely fast move. Oftentimes when moves are this fast, it's because they don't want anybody to get on board. You did have a nice bottom here. If you looked at the 4-hour, you had divergence, a bit of a W. If we did chaos off this W, right, this is basically your W. Chaos points to, let's see here. Let me see if I get this right. Here's your 1.618 area tag, 2.618. See where we played in these areas. So we're playing in this 2.618, and the next zone, 4.669 is 4482 right up here, which is going to be a huge resistance area, previous area of price action. So, you know, that's maybe a possible zone. My main point is that this is not, I mean, this is a very difficult market to trade. I've rarely seen things this brutal. And I don't really have a good response for it. I don't have a good answer. What I don't like is that on the 3-day and on the weekly, we broke down. And now we're basically retesting that breakdown. So you've got this higher time frame retest happening, and then in the lower time frame, we're breaking out. But we're hitting this VIP level. So that's acting as a resistance. I've really got to see how it develops going into Monday. I almost wish I could do this show on Monday or something, because I think I could give a lot better forecasts about the week ahead, while this is just a closing out and a cleaning up of the week. I don't see us doing much more than maybe pushing up here and kind of doing this. This is all I see going into next week. And then next week on Monday, when we get more data, then I could probably make a better prediction on where I expect price to go. But for now, I'm kind of on the sidelines just watching. Something interesting that I am keeping an eye on that can provide direction is DXY, which had a massive pullback down to, right? So if we look at a weekly, a 9 came in on the weekly. I talked about this last week, how there was a 9 on the 3-day and on the weekly, and there would be a possible pause / pullback, but it's still very strong, very, very strong in these higher time frames. Daily's tagged the VIP and it's bouncing. So the dollar narrative is an interesting narrative as well, and something to watch, because if the dollar can break out and start rallying again, then obviously the S&P rally is over. But it hasn't yet. It rolled over, broke its uptrend, and now it's simply retesting the uptrend before possibly rolling over further. So that's another thing we have to watch to see what happens here. And by the way, guys, I don't know if I'll have to see when I listen back, but I don't know if I sound weird or not. So if I do, I apologize. It's just because of this like sinus infection I have. Very annoying. Don't ever get a sinus infection if you don't have to. One of the worst things. I think this is only the first or second time it's ever happened to me. So, yeah. Okay. Thank you, Cotter. That makes me feel better. I've got my confidence back. If Cotter says I sound fine, then it has to be the truth. I know he doesn't lie. Very weird. Okay, Brian says I sound weird. Damn. Okay. Speaking of weird, look at Bitcoin right now. 6666. That's weird. Oh, it just changed. But we had a quadruple 6 there for a minute. So DXY, here's the main issue and why I can't give a clear answer on anything. The higher time frames don't match with the lower time frames. And I consider that no man's land. So right now you've got on the S&P 3-day and weekly still pointing bearish. And on the DXY, you have the 3-day and the weekly still pointing bullish. But on lower time frames, they're the opposite. DXY looks bearish and S&P looks bullish. And that's why I'm saying I need more data. We need to get past Friday through options expiry. Then we need to see how things look next week. I think next week we have quadruple witching, right? So if I go back to the options, I think that's the big options week. Brian, correct me if I'm wrong because I know you're listening. But I think that's the big monthly options expiry, right? So if we look at that, we can kind of get a clue as to where they might want price to be. So 4,400 is basically max pain level. See that? Look at how many options are here. Look at this. 66,000, 82,000, 185,000 at 4,200. And if we go to tomorrow, right, which is the weekly, look at how much smaller. I mean, they've got 62 here, but most of the time you've got 30,000, 20,000, 18,000. And we go back. Look at this insanity. 65,000, 82,000, 184,000. Even on the calls, we've got a lot. 61,000. So, look, if I was a betting person going into next week, looking at options here, I would say they're targeting 4,400. 4,400 to 4,450. That's going to be the range that's going to provide the maximum amount of profit to make sure all these puts and this super bearishness expires worthless. And then if we go to the week after that, now keep in mind, the further we go out, the less accurate this is. So if that's, let's go to 1027 and just see what that looks like. But that's not going to be accurate at all. It just doesn't matter. It's going to look completely different when we look at it a week from now, 10 days from now. Interesting to see a huge amount of calls at 4,450 and then puts at 4,250 and then just all puts all the way down from there. Very interesting. Look at how many puts on this downside. This is incredible, the number of puts here. Really huge amount. Let me go into November. Look at all these. Oh, this is not that many. Let me see something. Look at the number of puts here. Oh my goodness. How can this market, I don't see how this market can fall with this many puts being bought. I'm really surprised about this. Wow. Huge. Way more bearishness in the market. Wow, look at all these. Really shocking to see this number of puts. Let's go all the way out to November. Or December. Really not many calls at all. Well, so there you go. Going out the next couple months, it seems like the majority of investors are buying puts because they expect a crash. So if the market wants to hurt as many people as possible, which is normally what it wants to do, it would benefit the market to go to the upside. I mean, there's not that many calls up here. We go out to November. I mean, this is just 50,000 or so. But you've got 120,000, you've got like 500,000 puts versus only maybe 200,000 calls. Huge difference. Look at that. Shocking. Okay, well, hopefully that provided some interesting insight. It did for me, and makes me a little bit more confident in the bull case. Just because, but we've got to check that every week, right? These things can change. And I think it's only applicable to things like the S&P. I wouldn't apply it to like things like Bitcoin. All right, so that's the S&P. That was DXY. You can see I was looking at the US CAD before. Okay. I think let's take a look at gold really quick. So gold also had a big, dump and then huge reversal. But an interesting thing about gold is it did not break out higher on the RSI. So it's still under that downtrend line for me. No real breakout and having a major rejection here after it hit a 9 in the 4 hour. You can see if we go to this 1 hour time frame, I have this uptrend line that is playing with now, kind of bouncing around. It's almost like a wedge formation, which is generally a bearish formation. If we can break down and the dollar rallies, then that's definitely a bearish sign for the market. So you can again, I feel like a broken record here. You've got conflicting signals all over the place. I wish I had a clear trade signal for you guys. I don't. Sometimes you just got to sit on your hands, and that's where I think we are right now, where we can go in either direction, and better to wait for more data. Something that was fun that popped off was Tupperware. So I was nibbling Tupperware all down here in the dollar zone and a little bit of $1.50. So I enjoyed this pop here, and I sold a bunch of it. I have a little bit still that I'm holding, but that was a little fun pop that we got. So a nice double on Tupperware, at least on my dollar cost average, since I was doing it since about $1.50 all the way down. So nice to see if it can push above this 200-day moving average. Could go up to $4. We'll see, but it's kind of a like all over the place stock. So that's why I sold half already up here and kind of moved it off the books, and it'll just go wherever it wants to go. So I thought I would pull that one out. I would talk to you guys about that one. Okay, let's talk about crypto, and then I'm going to talk about the breath, and then we're going to go to the after party. So for Bitcoin, as I told you, our breath system went short over here on October 10th at 27,700 or so, and we've dropped 1,000 points. You can see on the daily chart that Bitcoin actually broke down from its uptrend, right? So this was confirmation. So if I was trading this on RSI, my confirmation was on October 11th here. So I'm batting worse than our breath indicator, which is why we have it, because I know that it's better than me in a way, in some ways. Oops, I do want to delete that because it already happened. But you can see on a 4 hour we hit a 9, and now we're staging a bit of a reversal. So right like that. This is basically your reversal buy zone down here. So I don't see why you couldn't play this on the long side now. Buy here. So this is one play you could do. Set your stop below the lows and play the W. This is your W, right? Right there. Let's be conservative here. And then your target is right up here. But you could make it a smaller target and just do a 2-to-1. So you just go up to 27,300, or you can go all the way up here to the 4.669 at 27,800. It's a good risk reward trade, 4-to-1. Not a bad trade to take. You are on the other side on the 4 hour. However, the daily did just break down, and if we reverse this and we call this a giant M top up here, right like that, then you only just hit your first stop level, which is 1.618. That was your first stop. And the next stop is here at 25,700. And then your final stop is at 23,800. And that's very well where we could be going. We're just taking a pause here. I mean, you've got a 12 on the 9 hour, or you got a 9 on the 12 hour for Tom DeMark. You hit a 1.618. Generally, there is a pause there before the next down leg. So you have the next down leg, hit the huge amount of resistance here, and then we go below the lows to take out all this liquidity. I mean, there's probably a ton of stops set right below these 24,800, 24,900 levels. I don't know why they wouldn't hit the stops here. It makes perfect sense to me. And this would be a zone where you could consider selling and also buying depending on price action. My ultimate zone is down here, which is ironically your 8.77 level, right? So I have my two zones here and here, but that 8.77 is a nice area. So, you know, be careful with Bitcoin here. It's looking very bearish on the higher time frames. Our system is also bearish for 2 days now. However, you could get a bit of a bounce right now. This is your bounce zone as I showed you on that 4-hour chart. Let me see if I can. I mean, ideally, if we were following, I could. Let's say that this is a 5-wave pattern, right? And you're going down, and this is your parallel channel, downward path for Bitcoin. I think it's a bit too narrow of a channel. I'm gonna make it. Let's make it a bit bigger. Can we be? Let me see something here. 2,700. It's a very narrow channel. I don't like something this narrow. Let's do something like this would make a lot more sense to me. Just pull it all the way out like this and like that. Yeah, that makes a lot more sense as far as a downtrending channel on Bitcoin. So if this was like 1, right? Then, and again, this is just pure speculation. If this was your leg 1, then leg 2 is probably going to look something like this. And we'll bounce all the way up to this 27 area. And we could play in this zone for a while. I'm not saying you can't be up here for a while. And then we put in our leg 3. And leg 3 could go all the way down here, probably further. And we do something like that. And then we pop back up. We do that. And then we hit our finally leg 5 down, something like that. This is not exact. I think it's not going to end up playing out like this, but it's just a general idea and playbook that you could use. I mean, we could even just do this, and then the 5th wave is just like that. And then we play in this area for a while before then dropping further. Many different ways that this can play out. If I take let me see something. If I take an extension of this, 1.618. Yeah, that basically lines up. This 3 crash basically lines up with what I'm looking for. Yeah, so that's a potential scenario. I'm going to delete it, but good to keep an eye on this parallel channel to use as certain levels. If you're trading this on a lower time frame, which I don't recommend, but this is how I could see it, how Bitcoin could play out. Okay, so that's Bitcoin. I mean, I could look at a ton of other cryptos. I will in the after party. I'm not going to go into it too much in the public show. Let's look at quickly the breadth and what's going on with the breadth. So we've got a couple different things here. I'm going to hide this to give you guys more of a real estate. And I wish I could even hide. I wish I could hide all these things up here. How do I? Nope, don't want to do that. How do I make it so you guys can see more? I guess I can't really. It's fine. Okay, so this is the S&P 500. We've got 10K static, 10K compounding, and you can see we started in March 2022. As of the latest update, we are at 22,000 on the 10K compound, and the static we're at 18. So that's a 221% return and 187% percent return. F11. Somebody said F11. Function. No, that doesn't work. No, that just makes it way too big. Because I've got it in a window on a massive monitor. But appreciate it, Coke. So 221%, and that's no leverage. And an 82% win rate. The win rate is crazy for the S&P, 82%. Now, if we go over here, and this is my preferred one for trading the S&P, I use the 3x leverage. So anytime we get a signal, I just take a long with the SPXL, and then if we get a short, I take a short with the SPXS. There's no margin or anything here, but I am on 3x leverage, so that definitely turbocharges the trade. You can see we had a new long signal that came in on the 10th, and I took that, and that gave us the results. I haven't shown BTC yet, Coke. We hadn't had a new signal in the S&P since September 1st. So I was waiting a while for this data to come in, and finally we got the new signal. And you can see how much the portfolio jumped. We didn't do a lot. There was a bit of stagnation from January, February, March, April, May, from May until July. But then if you look at how we went from 50 in July to 62 in August, and then 71,000 by the time we made it to September. So it's at a 712% return right now. 72% success rate, because it's a little bit harder on the SPXXL and S because of time decay than it is on the spot, but your returns are way higher. So in only a year and a half, we're at a 700% return on this. Really crazy. Here's Bitcoin. So that's the last one that I have here. Bitcoin was started on December 26, 2021. And now we're here. We had a new signal that came in on the 10th, right? So let me add that. I don't know why it's not filled in. So that came in on the 10th. And there's no new data here because I need to get the next signal to see how much profit this one made. So the cool thing is, though, with Bitcoin, we're at all-time highs. If you look here on spot, we're up 338% in about a year and I guess a year and 10 months. We'll be at 2 years at the end of December. So 338% in a year and 10 months is pretty amazing. If you had reinvested all of your profits, you'd be at 800% just compounding. That's insane. This was 10K before. Now it's 81,000. Then we have the 2x compound, which is just pure insanity. And I wouldn't believe it myself if I wasn't the one testing this. This isn't even correct. I need to fix this. Let's fix this on the fly. The 2x compound is at 5,253% return. Is that an all-time high now? You can see it was never this high before. See how we started at 10,000. 10,000 first trade made us 3,000, and then we just continued growing from there. Sometimes you can see it didn't grow, and it did lose a little bit. Like here, it's not perfect, right? So we went to 250, 280. We had 320, and then we went back to 275. And then we climbed back up, and we sat in this. We had 511, and then from basically July until now, it was just working on getting back to that 500,000. So yeah, it was oscillating a lot the past July, August, and September was a lot of oscillation, and you can see that with the price data. So the way you know that this is not some made up tool or something and it's totally real is because it doesn't make money every single trade. Look, it was wrong 4 times in a row. One time it even lost 6%. Like this was a really bad one. But then you have another trade where it made 9%. The key is being consistent. You have to be consistent with your trades. And if you miss even one signal, that can be this big signal that, you know, makes you the huge amount of profit. You can see this one made 18%, and you get these big jumps. And that's how it works in the real world with real trading. You have to follow your setup and take every trade, or you're going to miss out on the big moves. Yeah, Coke, I'm not sure. Maybe you're not following the signals to a T or something. But mainly you just have to buy. I mean, that's all this is doing, is it's buying when the signal comes in and then selling when it switches, to the other side. Yeah, you have to take every signal. And especially with Bitcoin, you can see with Bitcoin, even though the percent return is higher, the win rate is lower at 58.8%. So you're going to have more losing trades, but you can see your average winner is more than double your average loser. So your average winner is around $700, while the average loser is $300. Yeah, that's what happens. That you have to follow all the signals. I just wanted to show the updated results now that we had some swaps, and to show that the portfolio reached all-time highs. Sorry guys, I'm caught. Let me drink some water. Anyway, I just wanted to show that and show that we're still continually updating and going through this, and we're trading it in real time now. So hopefully I can show that real-time portfolio as well. But it's doing super well, and we're very happy with it. So if you're interested in it, consider jumping on soon, because unfortunately we are going to raise the price on the breath, and it's only going to stay at this $7.95 price for probably another week. And then in about a week to maybe 2 weeks, we're going to increase the price significantly because we have some new tools coming, and also because it's performing so well that we don't even want that many people to be able to access it. Sorry guys, I'm really coughing. Let me get some water. Okay. Yeah, cool. Cool. So for everyone, it's going to be for everyone. The price is going to increase. If you're a veteran, you will get a discount eventually, but for now there will be a big increase. There will be a Black Friday sale, but it is possible that the Black Friday price may not be cheaper than the current price. So just something else to keep in mind. I just thought I would warn you guys about that coming. We're going to send an email explaining it in detail, so you can also wait for that. Sorry guys, it's really hard to talk right now. Okay, hope you guys have a great rest of the week. I'm going to do the after party. Hopefully most of you are members, and we can talk there and go into detail about a couple things. If you're not, consider signing up for a free trial, and I will see you there. And if you're not there or anything, hope you have a great weekend, and I'll see you next week. All right. Thank you guys. Bye.